start off with the power market, we've seen continued nuclear outage that went off back in September. At the moment that's due to last until the 22nd of November, so that's adding a bit of system tightness to the market at the moment. On top of that, we've seen really muted wind generation, and that's also adding a bit of system tightness. And further to this, again, the outages we've seen in France with regards to nuclear generation, and that's resulting in continued exports from the UK to France. At the moment it's as high as 2 gigawatts, and again that's adding some real tightness to the system and is driving prices higher at the moment. Looking at the gas market, we've started the week very oversupplied, and that's been linked to kind of warmer temperatures and the fact that we've got an LNG cargo due in at Southhook at the start of the week. However, if we move further through the week, we're expecting temperatures to decline, and on top of that we're also expecting the LNG send out to dry up a little bit as there's no additional cargoes booked in. In terms of oil prices, we've seen some really strong losses last week linked to an increase in US rig count, so the amount of active oil rigs in the US has increased by 9 up to 450, continuing that increase that we've seen throughout the start of the year so far. And on top of that, we also saw a record build in US stockpiles, so they went up 14 million barrels versus the previous week, and that's the highest build that we've seen since records began. So we start off looking at day-ahead power. We've seen it trade very, very high at the start of this week, currently offered at £150 per megawatt hour, and that's been linked to the system tightness we've already spoken about with regards to muted wind generation and the exports to France. Looking at day-ahead gas prices, although the system is oversupplied at the start of this week, we've still seen prices trade higher, and they're still floating around 2-year highs at the moment. In terms of seasonal prices, at the end of last week we saw them come off quite strongly, linked to a stronger pound. That stronger pound came about from the judges' ruling on the terms of Brexit and the fact that Parliament would have to vote on those terms before they were agreed, and essentially that's added some assurance to the pound going forward, which is potentially going to make imports from the continent to the UK cheaper in terms of both gas and power. Looking at oil prices, we saw oil fall off to about $45 a barrel at the end of last week, which is quite a strong loss from kind of previous week's price action. In terms of what it's done at the start of this week, we've seen prices push up a little bit, and that's been linked to the fact that OPEC have reasserted their commitment to the terms they made back in September with regard to cutting production, and we look to the end of November for the OPEC meeting, biannual meeting, which should give us a bit more clarity on if there's going to be a cut and at what level. So customers looking to place fixed price contracts should do ASAP. The recent downturn in prices that we saw at the end of last week represent an opportunity to you guys to potentially secure a slightly better price. With regards to duration of that contract, anywhere between 12 and 36 months is okay. It comes down to your attitude to risk. At the moment prices are increasing, and if you're looking at current market prices and thinking they're already quite expensive, if you can't kind of offset any further increases in the coming years, I recommend it fixing out as far as you possibly can. With regards to flexible customers with flexible contracts, it's down to attitude to risk. At the moment, we're very much in an uptrend, so I'd recommend having as high a hedge across your supply agreement as possible. And where you're not in supply agreement for the next kind of 2, 3, 4 years, I'd very much look at extending with your incumbent or running a fresh tender to make sure you are in a supply agreement, because at the moment the market is trending higher, and the expectation over the short to medium term is that prices are going to continue to increase.